Welcome back to the webinar, Money Management for Traders, 12 Ways to Lose Money in the Stock Market. Here's author Bob Joyner.
What I want to do is tell the callers a simple story. Inside this story are all 12 ways, and we'll go back and we'll list them one by one. But this is about a fictitious guy. His name is Joe. His name is Trader Joe. And you'll see on the little blue line toward the left of that top chart, that's where Joe entered his trade. So let me just tell you this 1-minute story, and then we'll talk about each of the 12 points briefly. Joe is a trader who needs to make some extra money. His car payment is due. He's tried some different trading ideas in the past, and he hasn't lost too much money, but he hasn't made much either. So on April the 24th, he decides to try something new. So he's heard about trading stocks that go down quickly, gap down type trades, so he decides to give it a try. He stumbles upon a company called Evergreen Solar, which is on our screen here, ESLR, and he sees how the stock price fell hard in the morning, so he decides to put all of his money on the line since that car payment is due, and he buys ESLR at $9.12 just after the market opens. He just knows the stock's going to bounce back up. Easy money, he thinks. Unfortunately, the stock price continues to fall. Nervously, Joe watches the price fall. He bought it up here. After he traded that same day, he watched as the price fell down to about $8.60, it looks like. Okay. Nervously, Joe watches the price fall, and he starts to sweat as he tries to decide what to do. Did I sell, he wonders? And he thinks and he sweats, and the price continues to fall until finally, some time after lunch, the price begins to rise again. Great, thinks Joe. It's going to go through the roof. And that's where my cursor is right now, and you can see where he thinks it's going to go great guns. It's starting to gap back up now, okay? Going to go through the roof. But then Joe says his trade is getting ready to show a profit. The price turns south again. Right about here. Right when he's right at that line where he bought it, suddenly the price starts to fall. So Joe begins to rationalize, and he says, well, I know it's going to go up tomorrow. I just know it's going to go up tomorrow. It doesn't make sense, he shouts to the computer. Why are these idiots selling this thing? They should be buying it. Look how cheap it is, as he yells at the other investors through his computer screen. Joe watches his computer the next day as the stock fails to make a comeback. He watches and he argues with the computer as the stock continues to lose money. I can't sell now, Joe says to himself. It's way too low. How will I make my car payment? It's got to come back. On the fourth day, that's 1, 2, 3, 4. On the fourth day, the stock makes a small rally, but it fails to come back to the price that Joe paid for the stock. So Joe doesn't sell. On the fifth day, it rises again. Joe doesn't sell. On the seventh day, Joe's had enough. So he finally sells the stock for $8.34. He's lost over 8% of his equity while waiting for the stock to recover. And after selling for a loss, Joe rushes off to try a different strategy. That's the end of the story.
I have to ask you, Bob, were you Joe the trader? Does this represent one of your actions?
No. Thankfully, no. But this is a pretty typical situation that I think a lot of people on the call can identify with. I mean, the names may be changed to protect the innocent, but this whole scenario of where we buy, we hope, we have great expectations, and then we want to hope and think that it's going to go back up and recover, and then what actually happens is it just keeps slipping further away until we have to make a tough decision. So let's go ahead and review those first 4 points. The main thing that started in the whole beginning for Joe was the lack of a good strategy. Joe started trading this, as you recall in the story, with just having heard something about trading gap down. So here's number 1 point. Thanks, Rick. So he began trading without a specific plan and without a specific strategy. That's probably the number one thing you can do wrong right there. I don't care what your strategy is. You don't have to my strategy. You don't have to use Manny's strategy, but you got to have a strategy, people. When I first started trading, the first 6 months, I was all over the map. I was trying everything under the sun. And, we're not going to go in tonight how to develop a specific strategy for yourself, but the main thing is you got to have one. You got to have one that's proven, that works, that has a certain, that you can do it over and over again and expect certain odds. So if you don't have that, that's the first thing. You can't just go into all kinds of different things and try everything under the sun. You've got to focus and figure out what works and what's comfortable to you. I don't care if you think that trading energy stocks every time we have a full moon is the best play. If it works for you and it proves out that it's profitable for you, great, then do it. I've heard everything under the sun. I've heard of people who trade just the 50-day moving average, and if the line is moving up and the candle crosses the line, then that means the stock's going to go up. Well, try it and see, but try different strategies, see what works for you, and see what's a good fit. That's one thing that Joe did right from the beginning that he did not do. He did not have a specific plan. He was just kind of going into it just on hearsay. The other thing that Joe failed to do is he failed to trade a new strategy with, practice it before he started using real money. That's our number 2 point there. So before you ever start trading a new strategy, whether it's my gap down strategy or whatever, you should practice it. You should do virtual trading. You should do paper trading, and we'll get into in a second how to set some of that stuff up. But practice it, please, before you actually try going live with it. The third thing I already mentioned, expecting too much too soon. If you're trying a new strategy and you've tested a little bit, don't expect to get 4 or 5% on your first day trading. Be happy with 1%. Be happy that you made a profit. Get in, get out. Be happy that you made some money. Number 4, trading your whole account without holding reserves. Joe did this. He was trying to make his car payment. He was actually trading out of desperation, which is a really bad psychological place to be trading from, and because of that, he took on more risk than he should have.
And we got a couple people saying, hey, I thought you guys are going to give us a copy of this, and that is absolutely true. We're going to give you a URL where you can get a document that has all of these 12 ways to lose money in just a little bit. Bob, we are about more than halfway through our webinar, and I just want to remind folks that at the end we'll be making them an offer to subscribe to Manny's first hour trading system on a trial subscription, so please stick around for that.
Number 5, I'm thinking you're smarter than the rest of the market. If you remember Joe, he was yelling at the other traders, why are you selling? Why are you selling? It's a great buy. If you find yourself doing that, and I have done it myself, then you're probably not paying attention to the charts. You're not paying attention to what the rest of the market's doing. You're never smarter than the rest of the market. If you are, then you're trading against the market and you're going to lose money. The market is what we trade. The market is investor sentiment, and you've got to be in tune with that. If you're moving against it, you're going to be in trouble. Number 6, attempting to catch the absolute tops and bottoms of the stock price, especially if you're just starting out trying to trade S-curves like I teach, or you're trying to trade gap downs and bottoms and tops. You don't try to catch the absolute bottom in price. That's why I said that profit, not perfection, is the key thing. You should be happy with some small gains. Number 7, buying and selling stocks without using stops and limits. We're going to cover that in just a second. But I did that for a long time, Rick. I traded just kind of shooting from the hip and didn't use stops, and it can get you in a lot of trouble pretty quick. Lost some money that way. Number 8, letting winners turn into losers. We've all done it. If you haven't done it, then you haven't been trading very long. It's where you think that the stock's going to keep going up, and you were making a profit at one point, but then you held on, didn't you? You held on just a little bit longer and just got a little bit greedy maybe, and you let that winner turn into a loser.
You're listening to a special webinar from WealthBuyer with author Bob Joyner, brought to you by First Hour Trading, where you can sign up for a free trial offer for Manny Backus's First Hour Trading System. Stay with us as the webinar continues.